since that time, I think Bitcoin's up 180%, right? S&P 500 is up like 80%, gold's up, 90%. So I called it a reverse market crash. So let's just first get clear on the terms.
What do you project in terms of the Bitcoin price that is needed,
right.
or how much Bitcoin does someone need to have in order to feel like they can be financially free at maybe a younger age than 65 or 70?
Right. So I'm gonna explain that, but most people look at Bitcoin in retirement through that lens because that's all they've ever known.
Yeah.
So then the debate comes in the Bitcoin community is, well, how much Bitcoin do I need to retire then? Mm-hmm. Which is the wrong question. So again, the primary method today is to save for retirement and then live off my savings and hopefully I die with zero, which I think is terrible. We should not do that. And why would I want to die with zero? Why wouldn't I want my heirs to start at a higher level than I had to start from? Yeah. So what the wealthy do is the wealthy play a different game. And the game of wealth is one where I earn fiat and I buy assets because assets are wealth. Mm-hmm. I don't sell assets for fiat currency. So when someone says, Mark, when are you going to sell your Bitcoin? I'm like, you don't even know the game that we're playing. The game is to get assets, always get assets. And what we do is we can leverage those assets. I call it, we can harvest the appreciation with debt. Mm-hmm. So rather than selling the asset and no longer having the asset that's compounding at 30 to 50% per year and then paying taxes on that, I can keep the asset but pull some of it off with debt. Yeah. So the real number is as long as the asset is appreciating faster than the rate of debt. Mm. So if I'm borrowing at 10% and the asset's going up at 20%, I could do that forever. Yeah. Forever. So the way that I've broken this down, I call it the 5-year retirement plan. I expect Bitcoin to hit $1 million by 2030.
You do?
That's about $1 million by 2030, 14 million by 2040, and 40 million by 2050. I have a whole video breaking this down with the exact math as how I got to that number. Okay. The government, the CBO, Congressional Budget Office, they project out the debt, the deficit
through 50 trillion
through 2054 for the next 30 years. Mm-hmm. So you just take the rate of monetary debasement and then project that over the last decade, 2 decades, and then project that through 2054, and you can see the growth of the store value assets. So anyway, sidetracking, but $1 million by 2030. Okay, so that's about a 10x. Not quite from here now. We're a little bit higher. But so if I had, let's say, $100,000 in Bitcoin. So let's say you're an average middle-aged, professional, and let's say that you've managed to save $200,000 or $300,000. Right? That's not enough to retire. No. You're going to sell 4% of those assets. You're going to be good for $1,000 a month. Yeah. You're not going to live on that. But if I took, let's say I had $200,000 or $300,000, if I took 100 of that and put it into Bitcoin today, in 5 years from now, that could be 5 or 6 years from now, that could be $1 million. Now, at the rate of Bitcoin's compounded annual growth rate and harvesting with debt, I could safely pull off about 10 to 15% of that principal every year in debt. So I put 100,000 into Bitcoin today. In 5 or 6 years from now, that's $1 million. That's 5 years, 5-year retirement. I could pull out $100,000 to $150,000 of debt against the $1 million in perpetuity. Never paying taxes on the money because it's debt I'm pulling out, not income. And the asset is growing faster than the debt is accumulating. So then in 10 years from there, you owe $2-3 million, but against like 20 million in assets. Yeah. And then when you die and your kids are your age, they're going to owe like $20 million against like $100 million of assets, right? And so the asset will continue to grow faster than the debt.
But it's also interesting what you said, because I recently spoke with someone who's a longtime investor, actually loves Bitcoin, but said they sold all of their Bitcoin in the 90,000 range because they're anticipating this massive crash because we're going to go over a cliff and he'll buy back in when it's like 70K or something. And I'm like, I don't know, good luck with that. I mean, we could always crash, right? I think we get a little excited when we hit a new all-time high, but we've seen some aggressive pullbacks with Bitcoin. Yet, I don't know, it feels like it's going to be less volatile and the downturns are not going to be 80% pullback like it used to be.
Yeah. What I would say to that, first of all, is actually you gave me this word on an interview we did together, a Fiat Maxi.
Yeah.
So when I was in Puerto Rico in 2021, one of my good friends there was a really well-known hedge fund manager, and he makes a lot of money, super, super smart. And he doesn't believe in Bitcoin. And no matter how many nights we had dinner together, I just couldn't get him to believe in it. But he loves Bitcoin to trade it. He loves to trade it, and he'll buy it at 20 and sell it at 50, and then he'll buy it at 60 and sell it at 80, and he loves it, and he's made a lot of money with it. But he's willing to buy it at 40 and sell it for 65, and then buy it again at 70 and sell it at 90 because he's not trying to get more Bitcoin. He's trying to make more dollars. But I want to get more Bitcoin. And so that strategy that he's doing doesn't get you more of it. So like this guy that you're referencing, this trader, I mean, certainly he can sell it at 90, but he'll probably buy back in higher than he sold it for. And if he's just trying to get more dollars, that will work, right? I don't think that's going to work for us. Now, back to the drawdowns. So there's a couple things. Number one, since the ETFs have come out, the volatility on Bitcoin has completely collapsed. So I've been dealing with this firsthand. I've been working with some Treasury companies, and there's a lot of Bitcoin sitting there. And so a lot of people are trying to figure out how to monetize that Bitcoin. And we've met with some of the top trading firms around the world that can trade, roll options on Bitcoin or whatever you can do to generate yield. And the numbers that they're showing year to date are not good, right? So the volatility is completely compressed.
What's your message of hope for people that haven't been in our community for years and are trying to build wealth and retire and help their families?
So I think if we just break it down super simple. So number one, we don't want dollars that are losing value because of the endless debasement. And so we have to move our money into something else. Most people just get that. Most people know you don't save in dollars. So then they're taking money out of their paychecks to go in 401ks or mutual funds or whatever. Okay, so now we're going to take money out of dollars into assets. And then those assets have return profiles. So your S&P 500 or your mutual funds are going to do 4 to 6%. Your S&P 500 will do 8 to 15%. Different assets do different. Gold right now is on a tear. It's up 80% in the last couple of years. But Bitcoin has been outperforming all those other assets. So then we have the return profile of assets. Now, whether I can afford $1 of Bitcoin or an entire Bitcoin, that's whatever, $125,000 or $10 million of Bitcoin, it's the percentage of gain that I make. So I have to put away money, and then I get a return profile. So forget if you can get 0.1 or whatever, it's still a return profile. So for most people, they're putting away their paycheck, but it's not earning the return. It's not keeping up with the rate of monetary debasement. So government tells you that CPI is 2 to 3%. So they think that's the hurdle rate that they have to beat, but it's really the rate of monetary debasement, which is about 10% a year. Yeah. That's the number you have to beat. So really Bitcoin is the only one to do that. Now, why do I made this book, wrote this book, Retire Off Bitcoin? Because Bitcoin is this cheat code. And the reason it's a cheat code is longer than we can discuss in this podcast. But let's just say for right now, it's averaging about a 60% per year compounded annual growth rate just over the last few years. And it's that extraordinary high rate of return that gives us opportunities that we don't have otherwise. Now, Michael Saylor projects it will stay at least 30% compounded annual growth rate over the next 21 years. So whatever number you want to take a look at. But the premise of this is that the pre-programmed track that you've been living is to go to school, get good grades, save for retirement, and then one day you could quit and do nothing and live off of your savings. You could spin down your account. You could sell 4% of your stocks per year, like Dave Ramsey would tell you, and hopefully, if you time it right and there's no market crash, you'll die before you run out of money.
Do you also believe that we're going to see more momentum in stocks, Bitcoin, gold? And do you think that will ultimately lead to some sort of a crash? Because I feel like when I speak to the average investor, there's almost like it's one of two mentalities. We're either going through like a melt up, parabolic move, bull market on steroids, or oh wait, we're about to crash. All the economic data is weakening. We're going to have one of the biggest crashes we've seen in terms of financial crises.
Yeah. So I'm somewhere in the middle of that, but it's different than what most people consider. So in October of 2022, I put out a YouTube video saying that there is no market crash coming, and here's why. And then December, January, I said, hey, here's what the Fed did. It's time to go back in. August of 2023, I said the bear market's canceled. December of 2023, I made a video titled Reverse Market Crash. since that time, I think Bitcoin's up 180%, right? S&P 500 is up like 80%, gold's up, 90%. So I called it a reverse market crash. So let's just first get clear on the terms. So if we think about a crash, and most people are still afraid of a crash, the boomers are out there in the crash. So what is a crash? I would call a crash when my standard of living goes down. So in 2008, we had a deflationary crash. Home prices cratered 30 to 50% across the United States. The S&P 500 crashed 50%. Gold was down. I think S&P 500 was 65%. Gold was down 30, 40%. And so we had this deflationary crash. And what happened is then businesses went out of business. People lost their job. People took new low-paying jobs. Businesses didn't do as well. And so what happened ultimately is that I had less money, so I didn't have the same quality of life I had before. That was the crash. My stock account dropped. My home account dropped. I felt poor. I lost my job. My business didn't make as much. And my lifestyle went down. My lifestyle crashed. My standard of living crashed. I couldn't buy as much vacation, as much food, as much house as I did before. Now, that's when a deflationary crash happened. But what I've been projecting, and I think what we're witnessing, is a reverse crash. And so it's a crash up and not a crash down. So the same can also result, or we can get the same result, but from a different way. So right now what we're seeing is prices running away from us. So the S&P 500 is not crashing, it's continuing to go higher. Bitcoin's going higher, gold's going higher, homes are going higher, meat, milk, eggs, vacation, all that is going higher, but the result's the same. I still can't afford the same quality of life I had before.
So an inflationary crash.
It's an inflationary crash.
Your standard of living.
Right, so I'm calling it a reverse crash. And I think it's actually much worse. And the reason why I say it's much worse is in like 2008, there was a reset. So for a lot of people who were priced out of the market, they were able to get in the market. Now there was good deals on homes, there was good deals on stocks, things like that. And so it sort of gives you this reset. People can buy in. If you still have money left over, you could ride the wave, the recovery back up. But in a market like we have today, there's no reset. And so what happens is, since I started making these videos, 2022, 23, one of my friends, a really big macro channel on YouTube, we had dinner in LA in August of 2023 after I made the video, Bear Market's Canceled. And he said, how dare you make a video like that? Don't you understand that the markets are all-time high? Don't you see that the yield curve is inverted and like all these things? And I said, yeah, but that's not how I see it, right? So we have Harry Dent's been calling for a 90% market crash for 12 years. You have all these doomers that are out there, and a lot of people have been scared and they've been sitting on the sidelines, and they're waiting for that 2008 moment they can buy back in. This time I'm going to have cash. This time I'm going to be able to get back in. But the problem is they're just getting further and further behind. And so I think, to answer your question, I guess the melt-up thesis, but I don't think a melt-up thesis into a blow-off top. It's just like a continued runaway. And I think really the crash, the bubble is not in homes. It's not in stocks. It's in U.S. Treasuries. Yeah. It's in U.S. dollars. So the crash that we're seeing is in U.S. dollars. And so there was a chart that was going around, I'm sure you saw a couple days ago, and it showed a bunch of different asset prices, both in dollars, in gold and Bitcoin. Yeah. And so when you change the unit of account, you just start to see the world a little bit differently. So when you see that the cliff that assets are falling off of is the dollar cliff, right? Yeah. So that's the blow off top. I project that prices are going to continue to run away and people are going to be further and further behind. I
would just love to get your take, because it seems like the growing consensus is actually to move toward these hard, scarce, but inert assets like gold and Bitcoin.
Yeah. Yeah, so last week, I believe, JPMorgan put that out, the debasement trade. And I think it was, someone asked me earlier today, when will Bitcoin move from like this risk-on asset to like this risk-off asset? When will it be deemed like a safety trade? And I said, I think a lot of people have already seen it like that for a while, but I think if you look at JP Morgan's announcement last week calling it the debasement trade, that maybe put the pin in it. And so what JP Morgan is basically saying is that governments will always debase their currency. They will continue to print forever. And so the trade, the obvious trade, is to leave the fiat currency and go to a hard asset. And the hard assets are gold and Bitcoin. Now, JP Morgan has been talking about Bitcoin for a long time. They put out years ago that they thought they projected Bitcoin to overtake gold. Mm-hmm. So they've been projecting that for a while. And so for them to now lump those two together and basically consider it a risk-off move, like a safety haven asset, and then you combine that with their guidance of it passing gold, then it does look way undervalued, right? So gold is, what is it, 21 trillion or so right now today. So it's about a 10x move for Bitcoin to be able to catch up to gold. And so a lot of times people want to know, like, is it too late for Bitcoin? Which I think is an interesting question, because typically you buy stocks based off of the future valuation of those stocks, but people think about Bitcoin based off the past performance, which is kind of weird. But when you look at these like forward guidance, like JPMorgan saying it's going to surpass gold, when you look at them put out this announcement last week of the debasement trade, it looks super undervalued. And I would say that for Bitcoiners specifically, and for gold people, they've understood this for a long time. And they understand that when you print more dollars, the existing dollars buy less goods and services. But most of the world still doesn't understand that basic concept, and they still think of things getting more expensive. But so anyway, for them to put that guidance out there, I think people are waking up to it, and yeah, it's taken off.
I wanted to get more of your take on that, because we're seeing some massive geopolitical shifts on the monetary level happen, more net settlement in gold.
Yeah.
And yet we are pushing stable coins more and more. We have the Genius Act, now they're working on the Clarity Act. So what do you think the strategy is? Because we have not created, I mean, we've established the strategic Bitcoin reserve, but there's no audit of how much Bitcoin we have and no official plan of how we're going to accumulate more yet.
Yeah.
But they're pushing into these stable coins, and I think they're going to want those to be buyers for short-term treasuries, right? Since we no longer have as much foreign demand. So what do you think are the chess pieces at play here? Because it seems like BRICS is moving to gold. Are we going to move to gold, or are we going to move to Bitcoin?
So over what time frame? And that's always the question to ask. So you're going to hear, for the audience, you'll hear like, this guy says bonds are terrible, this guy says bonds are great. And typically there's a mismatch on time frame. Yeah. There's a big mismatch on time frame on Bitcoin treasury companies like MicroStrategy, like Saylor always talks in 10-year or 20-year time frames, but then you have option traders trying to trade it quarterly, right? So back to this question. So I think there's several of things going on. Number one, the Biden administration and Anthony Blinken killed the dollar when they basically seized Russia's bank accounts, right, during the invasion of Ukraine. But really it started way before that. So in 2013, Russia and China had announced de-dollarization efforts. So it had been going on for a long time. So the world's been trying to move away from the dollar for a really long time, and mostly because, well, two reasons. Number one, the U.S. continues to print more dollars. And so if you're holding the bond, you're just getting liquidated. Number two, the weaponization of the U.S. dollar. And so that really culminated with that, when Russia moved into Ukraine, and the U.S. and NATO basically seized their bank accounts. Three superpowers in the world with nuclear weapons, one of which is Russia. And so all the nations of the world thought, shoot, if it happens to them, what chance do we have? Okay, so we'll come back to that in a second. But there's two other things. So then the dollar, there's the dollar's reserve status in the world. And that's being threatened because nations don't want to hold it. And so there's been a move to gold. So the BRICS have been moving to gold. China's been moving to gold. Russia's been moving to gold, right? We can see the central banks around the world have been buying. They're net buyers of gold. But then we have the U.S. dollar. And so I think it's an interesting move. I think it's a genius move of what the Trump administration is doing. So they've passed many executive orders this year, one of which is the Genius Act, right? And so using the dollar, I did a video talking about, you mentioned the chessboard, the cliche term of the 4D chess move, but I talked about the 4D chess game that Trump is playing and the Mar-a-Lago Accords, and there was a few key things that Trump wanted to achieve, one of which was keeping the U.S. dollar at 60% of global FX, of global exchange, and it had dipped down to about 59%. So 60% is where he wants it to be. And so one of the ways that they can do that is by putting stable coins out across the world. And so there's a couple of ways that reasons why we want to do that. Number one, he wants to keep it at about 60% of global trade. So we need people to continue to use that. The people around the world, not the governments, but the people are dying for the dollar. And that's because, I should say, dying to use the dollar. They want to exchange their failing currencies. So we have currencies collapsing all around the world, experiencing really high double-digit inflation. Lebanon, Turkey, Argentina, Venezuela, etc. And so those people need to get out of the currency that they're in. And so they want to get into the dollar, but the nations put capital control laws in, so they can't really get out into the dollar. And so the stable coins allow them to do that very easily, right? So that's number one. Number two, what the Trump administration did through the Genius Act is then make the stable coin issuers buy U.S. Treasuries. So now you have this demand for U.S. Treasuries, which is great, right? In that video you're referencing about Russia, what Russia was saying is basically the U.S. wants to put all the debt, the $37 trillion, into the crypto cloud, put it all into stable coins, and then inflate it away. And I was saying that's not really how it works. because stablecoins require $1 in to generate a dollar coin back in return. So it's not like it was like gold and they created more paper IOU certificates based off of that, right? The banks, the crypto institutions that are doing stablecoins aren't just creating those from thin air. So that's not really how it works, and that's kind of what I was trying to explain. But I do think what's interesting is that Scott Bessent, head of the U.S. Treasury, if you think his job is to sell U.S. Treasuries, that's his job. He's got to get someone to buy the debt.
Yeah.
And his job has been getting harder and harder because governments around the world know that they're getting debased, right? The IMF and the BIS both put out a white paper, and it's titled The Liquidation of Government Debt. And the liquidation of government debt, the white paper that they reference, is using something called financial repression. And it's a playbook that both the UK and the US ran after World War II.
Yep, yield curve control.
Yeah, which is basically to liquidate bondholders. And they liquidate bondholders by paying less than inflation, right? And so all the bondholders around the world know they're being liquidated.
Yeah.
Literally, right? So stealing 3 to 4% per year.
You feel like the individual should probably be empowered in order to fix some of this radicalization, right?
Yep. Yeah. A mutual friend of ours, Alex Fetsky, him and I co-authored a book called The Uncommunist Manifesto. And we did that, I think it was 2021, because at that time we had the rise of BLM, and I remembered specifically what created the inspiration for that book was the head of BLM was on TV saying, "Oh, we're trained Marxists." I'm like, what does that mean, trained Marxists? So we dug deep and went through Marxism and all his books, and so we wrote a counter to that called The Uncommunist Manifesto. And when you look at Marxism specifically, it's trying to create that gap. It's trying to create that fight between two different classes, the rich and the poor, the bourgeoisie and the proletariat. Marxism today now tries to pit everybody, black and white, and men and women, and gay and straight, everybody against each other. But they try to use that angst. But the original way to do that was class warfare, rich and poor. And really, when you dig into Marxism, what you find out is that they want everyone to be poor and they want everyone to be deprived, not because what most people think, then everyone's equal. The reason why they really want that is because when you're deprived of everything, you're unhappy. That's what they really want. And when you're unhappy, they can get you to do things like turn on your neighbor, turn to violence.
Control you.
That's specifically what they're looking for. Not because they think everyone can be happy and it's utopia, specifically because everyone's unhappy and angry and envious.
And own nothing.
Right. And so that's the goal. That's what they want. And so the way that we combat that, obviously, would be the opposite of having everybody own private property. When you look at, Karl Marx wrote 10 points of a communist nation. And in the Communist Manifesto, when I read it, there was a line that just stood out to me, and I thought, if everybody would just read this book, they wouldn't want Marxism. And he says, to summarize communism in one statement is the abolition of private property. That's it. To summarize it all, that's into private property. And so the opposite is then to have property, right? And so Bitcoin is property rights for people all around the world. And really what it is more than just property rights. Why do we want the property rights? Because if we can build property rights, we can build property. And if we build property, then that gives us hope of a better future. Because now I can have property that's pushing value into the future. I can have like this battery that's growing energy that can buy me goods and services in the future. And if I have that, I have hope. And if I have hope is what gives us energy to then continue to push for that better life. And so that's why they want to take it away, and we want to fight for that. And I think, it's one reason why when I started making content, when I started digging deep into macroeconomics, it was after 2008 when I got smacked down. And I had built 2 different tech businesses, had big exits on both of those. I built multiple 8 figures of real estate. Did really well in business. I wasn't paying attention to the macroeconomic scene. And when I got, smacked down in 2008, I was like, wow, what happened? Like, I'm really good with making money, but I don't understand this macro environment. And I understood then it's fiat currency and it's endless debasement and it's leverage built up in the system. And so once I understood the problem, then I became a gold bug. Okay, that's the solution. And then I just dove deep. And at first it was very selfish. It was like, that's never going to happen to me again. I vowed to my wife, like, I'm going to figure this out. Like, it was very selfish. But then it was like, no. We need to help other people solve this. And the reason why, back to this political radicalism that we have, is because we can see when you go back through the Bolshevik Revolution in Russia, or, any of these, if you look at what happened, Mao's revolution in China, or if you look at, Germany, it always starts from that place of poor people and using that greed that they have, the unhappiness that they have. And so I think we have a real chance to change that, right? We have Bitcoin. And the beauty of Bitcoin, the cheat code of Bitcoin, is that you can just buy Bitcoin and you can outperform every single hedge fund, every single venture fund, every single Wall Street analyst, every portfolio manager, every financial advisor, and you can just buy that.